Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. It's an packed week for the markets. While Friday's US PCE data kept investors cautious, China's latest stimulus measures, particularly the loosening of curbs on home buying, have sparked a significant jump in iron ore prices, injecting optimism into the commodities sector. Meanwhile, Japanese equities slumped this morning after the ruling party elections raised expectations of further central bank interest rate hikes, adding uncertainty to the Asian markets. The weekend was also busy with geopolitical developments as escalating tensions in Lebanon and Israel's latest strikes have kept investors on the edge. Good morning, JK, with a busy week ahead featuring a slew of labor market data from the US, brewing geopolitical tensions, and China's ongoing stimulus efforts. What's your take on the markets?
Good morning, Swaraj. Yes, I think we are ending another quarter today, and this quarter has really seen quite a contrast in volatility. And look at the dollar index; it has moved down by 5.5% from the beginning of July, and it's been an incessant fall in the dollar. But if you compare it, just for a contrast, if you compare it with what's happened in the rupee, you had just a moment of 0.65%. The low was 83.40 and the high was 83.98. So that's a big contrast. So you would say that rupee is actually uh, surprised, right, by its weakness. If you in fact add the movement in the forwards, which has also gone up by almost 60 paisa in the 1 year forward, uh, outright forward rupee has actually weakened. So I'm just giving a perspective that the quarter has seen some really contrasting moves. Also, if you look at the month-on-month basis, we are also ending the September month along the quarter. So it's been full of surprises. Month began with a very weak sentiment on the risk. We had seen big fall in the index post US coming back from holidays post Labor Day and all that, reacting to US you know US weak data giving fears of recession, and then Japan also rate hikes and seasonality also favoring, but that has completely reversed. And what we have seen last week is new high in Dow, a new high in S&P 500, new high in India as well. Other surprises, if you look at the dollar, it's been falling despite, accepting inflation coming down closer to the target. Friday's PCE number actually saw the core prices coming to 2.2%, much closer to the 2% target, except that. But if you look at any other data from US, most of them actually, GDP, the consumer confidence, and some of the manufacturing indicators, even the job market itself, indicated by the weekly jobless claims, have been much stronger. So on the side, Europe has had a stream of negative news on the economy. Germany posting negative growth, and the PMI is indicating the services and the manufacturing activity coming down. And what the market looks at, the interest rate differential between Germany and US bonds have also actually been increasing once again, despite that. This is another surprise that, despite that euro has been holding near 1.12, that we cannot. And the biggest surprise for me is for the month is the market's non-reaction to the geopolitical development, which you also mentioned. I think we are currently at a stage where it looks the most, uh, uh, risky point because of the number of killings that we have been hearing, and we may be much closer to a larger war situation than ever. So markets have ignored that, and we have seen the risk rally, dollar still coming down, no safe haven buying in the dollar. The only move that could have been, probably anticipated by the market and happened was in gold, which has touched a new high and still closer to the new highs. So been full of surprises this month. And why I'm mentioning is we are again starting another quarter from tomorrow, and quarter to quarter, you may still see some change in the trend. And looking at the way the dollar has behaved near 100.50, quite resilient, not breaking down. And the data from US, not really so bad that markets have to expect a 0.5% cuts going forward every month, so or every meeting. So market might still see a sudden shift in the stance for the dollar. That is what I'm quite cautious about. Um, Coming to the near-term factors, of course, the PCE number came quite as expected. I mean, quite weak, I would say, on most fronts, weaker than expected, particularly on the core side, and that will please the Fed members who have been indicating more rate cuts in the coming months. But again, we are yet to consider the other data. Job data this week will be very important, because we will also have many leading data before that, like the job openings and ADP numbers, and even the PMI, ISM numbers will also give an indication of how the employment situation is in the manufacturing and the services sector. So I think this is a very crucial week. If we were to have a reversal in the trend seen in the last quarter, or at least a good correction, that would be seen this week. The trigger for that is definitely this week. We'll continue to watch geopolitics, which definitely reaching a flashpoint, and of course on the rupee, which promised more strength based on the oil on the based on the dollar index move and also the flows, but suddenly stopped in its tracks at 83.40, because we had good flows to start with in the beginning of the week, and then the later part of the week it actually tapered off. So, and the RBI's uh, you know leaning towards more strength is not only based on dollar index moves, but also based on the flows, and the flows since then have been more on the dollar buying side. Could have been due to month end and quarter end demand. We'll see if that changes the pattern. But definitely, rupee has been relatively on the weaker side. We are at 83.70, I believe, be in 50-80 range. However, if the dollar index reverses on a concern correction, tested previous high at 83.98 cannot be ruled out. So all in all, for the month and the quarter, keeping a slightly neutral stance on the dollar, because we are at that kind of level where it can see some reversal. And same goes with the rupee also, slightly, remain on the weaker side for some more time. But 84, I don't think it is likely to break, because of the way RBI is positioned with a record amount of reserves at 692 billion, and nothing wrong with, at least in the domestic economy is concerned. Only the external factors can influence the rupee to be weak and beyond 84. I expect it to remain a range bound, definitely. So we have a short week this week as well. So maybe post 2nd October, we'll get some better indication because of the data that is coming in, and also the trend in the market, keeping the geopolitics in mind. Thank you.
Thank you, JK. And that was quite a summary of a quarter and month full of surprises. Really very interesting. I would not summarize that. So if you have not heard that, please go rewind and hear the excellent summary. And of course, this week the focus will be on the jobs data, ISM numbers, JOLTS, and many other, which is quite important to look at. Geopolitics is also escalating, and of course, rupee moving within a range, but all eyes will also be on the dollar index. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.